Hello, everyone. I'm Ron Cipriano, the chair of Jewish Federation of Greater Hartford's Business Partnerships Program and a co-chair of this event, along with my good friends, Jay Gershman, Coleman Levy, and Eric Zaks. And we're so glad you're here. Tonight, we'll take a look at one of the most exciting developments to hit the investment and banking industries in a century, Bitcoin and other forms of cryptocurrency. Jay Gershman will lead us in a conversation with industry experts Bryan, Bodner, and Shepard about what Bitcoin is, what all the hype is about, and what it means for the typical investor. Before we start, just a quick reminder that you can change your screen view by clicking in the upper right-hand corner of your screen. Speaker view shows the person who's speaking, and gallery view lets you scroll through everyone who's on the call. Now it's my pleasure to introduce Federation's President and CEO, David Warren, for a quick update.
Thanks very much, Ron. Even though this is a celebratory event, we want to start with a moment of silence. In the last year, we've lost over 500,000 Americans, including thousands across this region and many from our community. Please join me in reflecting for a moment on their lives and legacies. Thank you. So there's an interesting connection between tonight's topic and the work of the Federation. Bitcoin has become synonymous, of course, with innovation. It transcends the boundaries of traditional currency and traditional investments. As with many other forms of investment, though, a key to succeeding with Bitcoin is being unafraid to take bold risks and keeping a close eye on timing. Fearless, well-timed innovation is exactly what we are striving for at Federation as we think about the future of our Jewish community. This year, we have seen incredible innovation in men's philanthropy. Under the truly bold leadership of Ron, Jay, Coleman, Eric, and others, we're coming together on new platforms to learn about topics critical to our community, and we are making an impact in our community. We relaunched this division only 9 months ago with a Facebook Live conversation with Dan Hurley. And since then, the men of our community have raised nearly $1.7 million and literally engaged hundreds across our region and across the country. And this is only the beginning. Let me share a few examples. Federation is boldly innovating to ensure financial security for those in need. With our friends and partners at the Jewish Community Foundation, including Jacob Schreiber, who's on with us tonight, we've raised nearly $1 million for COVID relief. And this fall, Federation launched a $250,000, and again, that's just the beginning, a $250,000 Jewish free loan fund that provides significant interest-free loans to those who need a hand up, the highest form of charity. We are also boldly innovating to protect our community. After the shootings in Pittsburgh, Poway, Jersey City, and Muncie over the last 18 months, over the last 2 years, it became clear that we had to act to protect our synagogues and our institutions. Working literally with some of the nation's top homeland security and counterterrorism experts, we will be hiring in the next several weeks a community security director to elevate site security at all of our institutions, train literally thousands of community members to respond to threats, and lead crisis response. Finally, we are innovating to grow our community. We know this is an amazing community, an amazing Jewish community, but too often it's a well-kept secret. So we've launched an initiative to market the region, to market our community and encourage people, and we know there are many now, thinking of leaving New York City and other areas to move. We're encouraging them to move here for the great Jewish life, amazing community, and frankly, affordable cost of living as well. Together, we have accomplished all of this and much more during one of the most challenging times our community has ever faced. Your participation with us has been vital to our success. We are grateful that you are showing up and you are standing up with us. We couldn't do the work without you. Thank you very much. Now, please welcome our newest men's philanthropy leader, Josh Feldman, who will introduce tonight's speakers.
Good evening, everyone. I'm Josh Feldman. I'm a matrimonial and family law attorney here in the Hartford area. I currently serve on the Jewish Community Center board, as well as I was recently presented with the opportunity to join the Men's Philanthropy Group, which I'm very excited to be a part of. It's clear that the impact that this group has on the community is something that's something I would want to be a part of, and I'm very excited to continue to work with them on future events and other future programs similar to this. Now I'm excited to introduce our moderator, Jay Gershman, and our speakers, Bryan Bodner and Kent Shepard. Jay Gershman is the president of Retirement Visions, LLC. He is a past president of the Solomon Schechter Day School and currently serves on the board of Rebuilding Together Hartford. Bryan Bodner is on the private client team at BlockFi, a crypto asset services provider founded in 2017. Bryan has also worked at Blocktown Capital, where he researched digital currencies, protocol tokens, and other blockchain ventures. Bryan is the grandson of a Holocaust survivor, and he has earned his undergraduate degree from the University of Miami's Herbert Business School and his Master of Public Administration from Columbia University. Kent Shepard is the Senior Vice President and Senior Client Portfolio Manager at Franklin Templeton Investment Solutions. Kent has over 30 years of industry experience, including portfolio management roles with various asset class investment teams within the firm. He holds a bachelor's degree from Northwestern and an MBA from the Anderson School of Business at UCLA. Jay, Bryan, and Kent, over to you.
Thanks again, Josh. And I should mention that Josh has joined our team of Men's Engagement. And we're so excited to have you because you're a great asset for us. So I'm so excited about tonight, and I just want to give you a little insight. I'm so excited about this controversial topic. 3 months ago, when I first asked Bryan Bodner of BlockFi about speaking on this topic, I had no idea how Bitcoin would become one of the most talked about topics in the investment world. Never mind that the price has probably more than doubled. Before I start, though, I want to give all of you some context by which I view this topic. I look back over my own personal investing and career investing for others, and I think about all the new ideas that have come out. Some have made people wealthy, but most have not. I think if I can only talk to the 25-year-old me carrying the first generation of cell phones in a bag, I'll remind you, and whisper in my ear, someday that mobile phone will give you directions, answer any question you have. Oh, and by the way, your kids will spend half of their waking hours on it. Be sure to invest in Apple. You'll make a fortune. But then I think of the 40-year-old me who owned $3,307 worth of MCI WorldCom as the internet was just starting and internet stocks were doing what today's tech stocks are doing, going up like crazy. I watched that little account go to 75,000 overnight and then back to zero. As expert after expert told me MCI owned the backbone of the internet and that you couldn't go wrong. I watched as ideas that I have had become companies that made people rich. Yes, early on, I had this crazy idea that you could take that junk from your house, sell it on the internet to complete strangers, and ship it to them. But of course, the naysayers said it would never work. Nobody would trust another person who they didn't know. How do you know they were going to get it? Well, obviously, the founders of eBay didn't agree. And I let another get rich quick pass me by. So now the 60-year-old me is wondering about cryptocurrency. The naysayers are saying it's too risky and won't become an everyday means of exchanging money for services or product. The average person, including myself, doesn't understand it and hasn't taken it seriously enough to understand it. And there I am watching young people make a load of money as I sit on the sidelines. That is, maybe until they learn the same lesson most of us older experienced guys have learned, that if it seems like a sure thing, it probably isn't. So here's my biggest fear that a lot of you in West Hartford could probably understand. It's the memory of driving up Albany Avenue into Bishop's Corner with my Zadie in the 1970s. He turns to me and he says, "You see that building there?" Pointing to the Crown Supermarket. "I could have bought that land for $10,000, but your bubby wouldn't let me." As I interview these gentlemen tonight, you need to decide for yourself. Is this the next Apple, Tesla, Amazon, eBay, or the land the Crown is on that actually Robert Udoff owns, but not me? Or is it another MCI, Qualcomm, JDS Uniphase, or the swampland that my Zadie probably actually ended up buying? Well, that's tonight's question. Before we start, I need to have a disclaimer though. While Bitcoin is a potential investment, tonight is not an investment seminar. The three of us are securities licensed and actually forbidden from making securities recommendations to strangers, the public, especially an investment like Bitcoin, where most firms are still not approving it. Instead, our hope is to provide you information to get you interested and, of course, to have some fun. Lastly, there will be many terms tonight that will be confusing. Feel free to Google them as our program is happening, or fire off a request for clarification in your chat box. Send in all of your questions during the program. I promise I'll work them in if I can. Please keep our rules in mind when asking questions. Ask questions, don't ask for recommendations. And one reminder, even though everyone's muted, your video is live. Please remember that as you're walking down the hallway for a bathroom break, because it was so much easier in the old days when we only had to remind people to shut off their ringer. So Bryan, Kent, thanks for agreeing to educate us tonight. Let's start with the basics, because I want to be sure that our audience understands the nuts and bolts of cryptocurrency, or what most people call Bitcoin. So Bryan, I'm going to start with you. Can you give me a brief, understandable history of cryptocurrency? How long has it been around? Who created it? Who invented it?
Absolutely.
Are there names other than Bitcoin? And then I'll ask you some follow-up questions. So start with that.
Absolutely. And thanks, Jay, for the introduction. I also want to take a quick moment, just thank the entire Federation overall for having me. As it was mentioned in the introduction, I am a grandson of a Holocaust survivor. So it is with a lot of honor that I'm here kind of talking to you guys. And I appreciate the time. So yes, on to Bitcoin. So it was started in 2009 by a pseudonymous person or group called Satoshi Nakamoto. I say pseudonymous because he has the name Satoshi Nakamoto, but that is not actually their name. And nobody knows if it was a person, group, individual. Some people get a little crazier, might speculate that they are not of this world. I won't go there, but just a little background on who he is. So it was created on the heels of the 2008 financial crisis and quantitative easing. Anecdotally, embedded on the Coinbase of the inaugural block was a reference to an article where it said, the Times 03/Jan 2009, Chancellor on brink of second bailout for banks. So it just kind of like shows like the underpinning of like why it was created and kind of the ethos of what the creator Satoshi Nakamoto was going for when he created this network. So since then, to Jay's point, there have been thousands of other, I'll call them loosely cryptocurrencies, that some are trying to be new iterations of Bitcoin. Realistically, 99% of them will probably be worthless in a few years. And I also would caveat that this term cryptocurrencies has kind of taken on a catch-all phrase for all these different digital assets. But I would call them most often digital assets because a lot of them are not trying to be money. They're not trying to be currency. They have alternative goals that are a little bit different and kind of some different economic structures and incentives that don't really align with trying to be money. So while Bitcoin is kind of still the brand name, and in my opinion, it's the one really worth focusing on. Again, that's just my opinion. There are many, many other cryptocurrencies.
So I had no idea what you said when you said all that stuff after 2009, blah, 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 blah. So speaking for hopefully everyone here who didn't understand it either, is it fair to say that somebody came up with an idea like to make an alternative currency because they sort of didn't trust the dollar anymore?
Yes, I think that's pretty fair to say. They saw what was happening with the dollar. They didn't trust government intervention. They didn't like what was happening. Or I guess they didn't really have trust for the government to be able to kind of say, I can control the economy through expansionary monetary policy or fiscal stimulus. They didn't think that that was a reasonable solution to the problems. And they thought it was kind of going to create additional problems down the road. And so for that reason, in addition to some censorship resistance concerns, some privacy concerns, they thought that there was a better alternative, and they created what they thought that could be. And it shares a lot of the same qualities as gold, just kind of in a digital format versus the analog format. I'm sure we'll get into that a little bit later on when we start discussing the properties. But yes, your point is, I think, aligned.
So Bitcoin was first, as far as we know.
Yes, but actually, so this is an interesting point. So people will look at this and say, oh, well, Bitcoin's the first. Usually the first one is never the best. But if you actually look at the history of how Bitcoin came to be, it is actually the iteration of many failed digital currencies in the past. There was e-gold, there's e-cash, there's a whole bunch of other ones. And in the white paper that Satoshi Nakamoto posted, and in some several references after that, he shows references to a lot of these failed projects where he took some different aspects, some different stuff like proof of work mechanism. He quoted a lot of people who now are big proponents of space, like Hal Finney, who's passed, Nick Szabo, a few others who kind of helped to usher in these previous iterations. And then Bitcoin was the culmination of a lot of these other ones that are just a lot less well known at this point. And then since Bitcoin, that's ushered in this whole new wave of this cryptocurrency kind of industry.
So I see the term Ethereum mentioned. Is Ethereum another Bitcoin, another cryptocurrency, or not?
Sure. So I think this is a kind of some goes back to like some nomenclature. So Bitcoin is its own cryptocurrency. There's a few what's called a fork of the Bitcoin network, which basically means people try to copy Bitcoin with a few tweaks. That is not Ethereum. Ethereum is on its own kind of standing, where again, Bitcoin is really more focused on being a new version of money. And Ethereum is more of a smart contracts platform. And in Bitcoin, it has that capability as well. But really the goal of Ethereum is to be a decentralized platform for other things to be built on top of it.
Mm-hmm. Not that I understood it, but I'm going to go, mm-hmm. Okay. I also see one mentioned, I can't even say the name, is it Dogecoin or Dogecoin? But I know that that's the one that a lot of famous people like to talk about. It's not worth a lot, but they seem to be trying to pump it up. So is that a real one, or is that a fake?
I would say, again, this is not, anything I say is not investment advice. So take anything I say with a grain of salt. Yes. I would say personally, you could kind of ignore Dogecoin. It was created as a literal joke by people on Reddit. Reddit, for those who are unaware, is a online forum where people kind of post a lot of stuff. People on Reddit created this as an actual joke, and then it kind of took on a life of its own, as things on the internet can do sometimes. Where when Elon Musk started talking about it recently in particular, kind of as a joke, again, it really took some legs and pumped up. This kind of happened actually for those who are probably paying more attention to the GameStop and the AMC, that thing that happened recently. Elon Musk kind of took that as an opportunity to kind of, I guess, play into it a bit and kind of have some fun. And he used Dogecoin in that same way, and it pumped up a lot in the price, but I wouldn't look at it too seriously.
So before I move on to Kent, I want to sort of grill you in an area where I hope I can get clarity for our watchers, because I know that this is, if it's confusing for me, it's confusing for everyone. Okay, so first I hear that the reason why Bitcoin is so great is because there are a fixed number of coins.
Yep.
So I'm imagining that they're like actual coins, but I know they're sort of like a digital coin. But then I hear these stories about this digital mining. And I hear stories about how there are countries where they're seeing energy usage soar, and they're going into like a factory, and they're seeing people in a factory doing what they call mining Bitcoins. And this is sort of where I get lost.
Sure.
So first they say it's a fixed amount, and I'm picturing this fixed digital thing. And the next thing I'm getting a picture in my head of people in a factory doing something that creates little bits that turn into a coin. So straighten that out for me.
Sure. So the term mining, as again, I think it kind of like goes back to that likeness to gold. So it kind of was meant to be, I guess, analogous with how gold is created. So I won't go too deep into the mining mechanisms because it can be a bit more lengthy, but effectively mining is a way for people to validate transactions on the network and work to earn Bitcoin and kind of sustain itself. And that's how new Bitcoin gets minted. So worth mentioning on the energy surge, I think something that gets often overlooked is that studies that have gone from energy corporations at Etfs have found that roughly 74% of the energy that is used to produce Bitcoin is renewable. And this makes sense when you really boil it down because the cheapest energy that is available tends to be green. So whether that's hydro, solar, wind, et cetera, miners have kind of sought that out because again, they're more incentivized to find the cheapest energy possible. And they're not doing it for altruistic reasons. They're doing it because it's cheaper and more profitable to do so. So and I think there's some more I can get into on the sustainability efforts of that. I think are really.
Let me get you to clarify just so again, I could get that image in my head. So they're not mining the way people mine gold, but is it true that this room has like a lot of computers running?
Yes.
And these computers are like running algorithms and they're trying to do something that earns them the equivalent of a digital coin?
Yes, exactly. There's a lot of computers and they're called Asic machines, which are basically, it used to be people could do it on actual computers. It's gotten more competitive at this point where these things called Asics, which are effectively machines that are designed to mine Bitcoin. And like you said, they're solving mathematical, we'll call it algorithms. If it's interesting to anybody, the hashing algorithm is something called SHA-256, which is what's used to determine the playing field of this network, so to speak. But yes, there's a lot of computers in oftentimes warehouses, and they are putting as much computer power as possible towards competing for the right to mine the next block.
So a lot's changed since my math class, where if I solved an equation, I got a chocolate chip cookie. Now they give gold coins. Okay.
Yes, exactly. So on the other part of your question I believe you mentioned like the supply and demand metrics, where I think you mentioned something along the lines of if more people are mining the network, how is it not producing more, correct?
That's right.
Sure. So one of the most brilliant things, in my opinion, about Bitcoin that was created was this concept of a difficulty adjustment. So this difficulty adjustment takes place every 2016 blocks that are mined, which roughly translates to every 2 weeks, because what happens is the algorithms in place in the network look at something called the total hash rate, which is a measurement of how much computing power is going towards mining Bitcoin overall in the network. So the goal of it is to ensure that on average, the amount of every new block is mined on average 10 minutes. So on certain weeks when more people come onto the network, it might be a little more, and then the difficulty adjustment will switch to make it harder to mine Bitcoin. So then it kind of evens out in the next week. And then over time, the average is very close to a new block mined every 10 minutes. So this happens for 4-year periods. You might have heard people in the past reference what's called the halving. So every 4 years, well, more technically, every 210,000 blocks that are mined, which then translates to roughly every 4 years. So every 210,000 blocks, the amount of new Bitcoin that gets rewarded to miners gets cut in half. So this is called the halving. And so for this reason, the amount of new Bitcoin that gets mined for those 4 years stays completely stable. And then after that 4-year period, it gets cut in half. So for this reason, it's a disinflationary monetary policy that's encoded into the network.
So I just want for all of you out there who don't understand what he said, Bryan, I want to tell you, you lost me at hello. So, but I mean, we knew this was going to be a complicated topic, and we're all doing the best we can to get our first flavor of this. So I'm going to turn it over to Kent, and hopefully some of the things I ask you will bring a little more clarity, and then we're going to go back and make it more complicated. All right. So if you've ever seen a Bitcoin, it's actually looks like a gold coin. I think it has a $sign on it. So people have related this somehow to gold. I think Bryan mentioned that. Another way, so they think that this is a commodity, which for the sake of terminology, a commodity is a raw material that can be bought and sold. So examples are copper, oil, and natural gas. But lately, I've heard it mentioned as a currency, which is a system of money for means of payment. So I think that some people are investing in this thinking it's like gold, and other people are investing in it because they think it's like a PayPal system. So Kent, can you straighten us out?
Well, first, can you hear me okay?
Perfectly.
Great. So my preface before I will get to that question is I also want to thank you for the invitation to join this fine group. Earlier in my career, I managed an equity portfolio for the Jewish Reform Congregation in Manhattan. It's a wonderful organization I greatly enjoyed working with. And I need to do the little legalese statement that the opinions I express tonight are my own and not necessarily representative of my employer, Franklin Templeton, of which I'm a 30-year veteran. A firm of our size and scopes can have a lot of different opinions. So even some things I share tonight, some colleagues will agree with, some will disagree. But I have learned a lot from my peers who have technical expertise. And the way I approach tonight, and thank you for bringing me in, I'm a 56-year-old with 33 years of investment. I kind of try to lean on what I learned from working with Sir John Templeton earlier in my career. And that's number one, to be open-minded. Number two, have a healthy dose of skepticism about things that are hard to understand and doing exciting things, but also humility. And those are the behaviors I'm going to try to employ tonight in this conversation. I can tell you, I've been typing because I've already learned things from Bryan. And there's two of us on this call. One of them is the technical expert. The other one is a generalist who's been here to bring a healthy, open, perhaps devil's advocate, point out some of the common concerns, but not to be unilaterally negative on any aspect of this conversation, but rather to just share some of the concerns that the skeptical side of the world has. So back to the question: is it a currency? Is it a commodity? And I think, and I'd love to hear Bryan's opinion as well. It depends on who you ask. So the Commodity Futures Trading Corp, CFTC, considers it a commodity. The IRS considers it to be real property subject to capital gains, and just reasserted that view this past week. So it does share some characteristics of both. Some argue it's too volatile to be a currency because you toil, you work, you acquire wealth, and you don't want it to bop around too much in price, because then it impacts what it can translate into in terms of a good or service that you could acquire. It can, I understand, it's growingly becoming able to be used as a means of payment, but the merchant acceptance is budding. Maybe one day there'll be more. The volatility in price I mentioned, and transaction fees vary based upon various aspects of network congestion. So net of it all, and I think Bryan would probably know more about this, and the original white paper work envisioned it to be a peer-to-peer payment system. Entity A pays entity B, no bank required, no other financial entity required, and a clear public ledger confirming that the transaction. But I think the experts are now leaning more toward it being a store of value than a means of transacting to compete as a fiat currency. So kind of that's where I shake out on that question.
So a follow-up question is, this is a quote from Susie Orman, who was recently quoted as saying, "I love Bitcoin as an investment, but not as an alternative or fiat currency. It could be a possible replacement for gold as an investment." Do you agree with that?
Well, I'm evolving. I believe my early skepticism rooted in much of anything in ignorance or lack of the technical knowledge of the real underpinnings, and we'll talk about things like blockchain, I assume, the underlying technology. But I think I've evolved to recognize it could be viewed as a speculative investment. Now, that doesn't mean it's a bad investment. There are many worthwhile investments that are riskier than your average low risk bond or stock. But the potential range of outcomes at this stage in its existence caused me to kind of want to place it in the not necessarily uninvestable, but in the more speculative bucket. Bitcoin so far, and maybe it's because it's young, tends to be correlated closely with other risky assets. So when aggressive growth stocks go up and there's a quote, risk on Wall Street, Bitcoin tends to do well. Days when the NASDAQ falls and there's a risk off and there's a sort of a cautious stance, Bitcoin tends to fall. Now, is that a permanent condition? Perhaps not. But at least today, it doesn't strike me as a great diversifier because it participates with and sometimes amplifies the volatility of some of the riskier parts of your portfolio. And one of the more clever tongue-in-cheek responses I heard from a famous investor that I respect when he was asked a question about Bitcoin. This is 3+ years ago. Howard Marks from Oaktree, and he was asked a similar question, and he a bit of a tongue-in-cheek. He said, "But Bitcoin's a bit like gold without the L. It's premised upon faith." And faith is very powerful, and it doesn't mean it's a bad thing, but I can't find a way to calculate its net worth. So my belief in its worth is faith-based. Will it earn the faith of the world? It might. But today, for me, in my technical naivete, I consider it more speculative. And my guess is today's cryptocurrency craze are planting the seeds that years from now will prove to have been very valuable and world-changing. Technological innovations, real economic creation of ease of transacting and many other things. So I would probably bet that some form or fashion of the infrastructure that enables cryptocurrency will be a vital aspect of our economy and our way of life in the coming decades. I just have a harder time understanding how to value it today.
So we got some great questions coming in, and one from Jeff Katz, who I believe went to Bloomfield High School, and I believe I graduated with his brother. And he asked a question that is so complicated that I can't even say it, so I'm just going to read it. But it melds right into my next question, which is about blockchain. So Jeff says, when he mentions smart contracts, that is part of the related realm of blockchain, which people may have heard of. So Bryan may want to make that connection. So my question to you was, to make matters more confusing, Bryan, there is a relationship between Bitcoin and blockchain. And now I'm really confused. So please explain what blockchain is, and how does blockchain relate to Bitcoin? And I know you can invest in blockchain, but not Bitcoin. So, and they don't necessarily have the same risk, do they? So that was a lot of questions. So let's get to, what is blockchain?
Sure.
How does smart contracts relate to blockchain? And they're not the same investment.
Sure. So again, there's a bit of kind of nomenclature issues with the question so blockchain is an underpinning technology of what allows Bitcoin to function. So it's not that they're like necessarily, it's like one or the other. It's that it's kind of a different thing where, again, Bitcoin is an asset Bitcoin is an asset and a network, and blockchain is a technology. So what is a blockchain? Really high level. It's just a distributed, decentralized ledger. So it's just a record keeping system effectively for a bunch of things that happen on a network. It's really what it boils down to. A smart contract is effectively a contract that has certain coded in features, and when something happens, then something else is supposed to happen based on whatever is coded into the smart contract. So it's basically just allowing for automated kind of decision-making processes within a network.
So IBM says they use blockchain.
Yeah. So IBM a few years ago announced that they were doing this whole big blockchain initiative. There's actually reports recently that that blockchain division is now effectively defunct, and there's only a small percentage of the original employee base that is still there, and they've kind of downsized that a lot. There's a whole big push in the aftermath of the 2017 kind of ICO craze for this thing called enterprise blockchain, which I'm not personally very bullish on. I think kind of defeats the entire purpose of something like Bitcoin or a decentralized network to begin with. And I think you're seeing that a lot of, probably Ken could speak to this better than I could, as I'm sure Franklin Templeton's kind of explored this in more depth than probably I have. But a lot of these enterprise blockchain initiatives have been canceled, and they're pivoting towards kind of working more on these public ledgers like Bitcoin, Ethereum, and others. Generally speaking, that's not the case for everybody, but overall, that's kind of what we've seen. So for things like the IBM Enterprise Blockchain Group, it, at least to date, hasn't proven to be very successful. So can you invest in blockchain as a whole? Like, again, it's really like it's kind of like saying, like, can I invest in like TCP IP, which is like the protocol for the internet? So you can invest in different cryptocurrencies, which all have, not all of them, but many of them have their own blockchain. So you could, if you think cryptocurrency XYZ is doing something interesting, you could invest in that blockchain and go from there. So in a way, you can invest in specific blockchains, but you can't really invest in blockchain as like a technology. I'm sure that there's some ETFs that are kind of being built up. I think it was JP Morgan.
Yeah, there's one in particular that I've looked at that I'm not going to mention because then that could be a recommendation. But sure. I've noticed that on a day, cryptocurrency moves 4 to 5 times what the blockchain related investment is. So I would assume, I don't want to use the term risk, but less volatile probably means less risk, but I'm not sure. And that's why I asked the question.
Yeah, absolutely. So to answer your question, there's kind of like some roundabout ways of, if you believe in the future of like blockchain doing some different things beyond just Bitcoin, there's some roundabout ways of getting exposure to that, but you can't necessarily like buy a blockchain, so to speak.
The questions are coming fast and furious. I want to throw one out. Without any government intervention, what makes you know that things aren't being manipulated? Like, how do we know that there's a fixed amount of Bitcoin, or they're not adding to it, or they're not issuing more? Or, because there's really nothing overseeing it to keep whoever it is who runs this thing honest.
So that is an excellent question. And I would say that it is by far more transparent than anything happening in the traditional world today, where right now you're relying on certain reports that come out and kind of trusting the verifiability of them. Whereas anybody right now can spin up a Bitcoin node right now. Again, some people in this call might not know how to do that, but you could, if you wanted to, you could look up online how to do it. And it's very easy to run. Anybody in the world can run a Bitcoin node. When you run the Bitcoin node, you have complete transparency to everything happening on the network. So it's completely verifiable, and you don't need to trust a single person. So everybody's looking at the exact same thing. It's all verifiable. And again, this is a decentralized system. So there is no one person kind of making the rules or running it. That's kind of the whole point of it, is that there's a collective group of people on the network that are making decisions, and you need to get at least 51% approval for something in order for there to be certain changes or different things enacted. So again, the transparency for Bitcoin is far above. And again, like going back to what I mentioned before, a blockchain is just a ledger. That's all it is. So the whole thing is that it's a distributed, transparent ledger that anybody can look at any time to verify what's happening.
But some companies could end up using blockchain processes to improve their business operations. Is that fair to say?
I think that companies think they can.
Okay. So Ken, a question for you. Lately, we've been hearing institutions like MassMutual and Tesla actually investing in Bitcoin. And on top of that, we have countless investment professionals, including Kevin O'Leary, Ray Dalio, Bill Miller, celebrity Snoop Dogg, Ashton Kutcher, Mark Cuban, even Bill Gates talking this up. Is this a sign that this is for real, or a tulip craze? And if you don't know what the tulip craze is, you should Google it. But it happened in Holland in the 1600s when certain tulips became extremely valuable overnight. and, you know, like Beanie Babies of 20 years ago. So tell me, is this making it more real because these people are coming out? Are they self-serving, or is this a sign that you think that in the future, this may become part of our everyday life in the investing world?
Yeah, I mean, the short answer is time will tell, but I think the answer is both. I think the very credible voices, institutions, respected tech titans endorsing it certainly give it credibility, but it's also, whether intentionally or accidentally, subjected it or made it be the recipient of a tremendous amount of hype. Professional traders feel that this has led to a surge in momentum. Just the positive movement has itself drawn in investors, and that type of sort of a pattern sometimes doesn't turn out well. So when a lot of people are buying something not based upon fundamental understanding, but based upon the movement in value, sometimes we call that momentum, positive momentum. So if you asked if it could be a tulip mania, I'm not prepared nor technically qualified to say that it definitively is, but the speed and magnitude of price movement inherently does involve risk and probably continued volatility. Now, as Bryan pointed out, and you've alluded to, the concept of scarcity is one that a lot of credible voices are getting behind. When it comes to institutional use, you have to have custodial capabilities, how to store it, how to define your ownership. And I know from what I read, the industry is getting a little bit more built out in that capability. But Bryan, I'm going to say, probably knows more about this, but my colleagues have pointed out that it's a really, really big fish if you're a hacker, and if you want to steal something from somebody digitally, Bitcoin is a pretty attractive target. And I suspect the technological defenses continue to improve every day. But in 2014, once was heavyweight of the Bitcoin realm, Mt. Gox had $30 billion stolen from them, and they subsequently went bankrupt. So there'll be bumps in the road. And my guess is the security capabilities of the Bitcoin participants will probably continue to improve.
I got a whole ton of questions coming in. I apologize to you guys that I can't work as fast as you guys are sending them in. So here's a question from Eric that says, what makes Bitcoin so volatile? 9,000 in August, 57,000 today. My question was, if Bitcoin is being used to store wealth like a currency, and people are planning on using it to buy items like a Tesla, how does a person accept 5% daily fluctuations? Do you see those fluctuations getting smaller in the future as this becomes more mainstream?
Yeah, sure. So one, on why the price has gone up pretty dramatically, people just will kind of, this is a point of a lot of discussion over why certain times the price goes up a lot. But again, I mentioned the halving earlier, where basically the new supply that enters the market gets cut in half, and that recently happened this past May. So it creates a supply shock in the market where it's just basically kind of supply and demand economics playing out, where if the same amount of people or more are all looking to buy Bitcoin at the same time, and there's there's half the amount available on the market coming available, then that causes a natural kind of new price discovery where the price goes up. So what we've seen, however, is the price actually is over time getting less volatile, believe it or not. And pretty dramatically each halving cycle. So going back to your point of how can people buy Teslas with it? What do we see happening? I think this goes kind of back to your question earlier to Kent, where is it store of value? Is it currency? So it goes back to that. And the way that I view it is there's really three things a money needs to accomplish to be money. It needs to be a store of value, it needs to be a medium of exchange, and it needs to be a unit of account. So for something like Bitcoin that's being bootstrapped and is not kind of issued by government and is, again, this kind of new revelation, one, is still very young, and it kind of needs to graduate through these different periods, these different levels, I'll say, in order to kind of fully become money. So right now, it's kind of exiting what was previously just like a digital collectible, like weird internet nerd money kind of thing, where people, again, were kind of just buying it, didn't really know what it was or whatever. It's kind of leaving that phase, and is now really starting to enter the mainstream in its early stages, I would say, still as a true store of value. So once that happens, enough people start buying it as maybe a hedge against inflation, buying the scarcity narratives. They can get a kind of transport value over time and space, et cetera. As more people start doing that through a store of value kind of narrative, then more people in the network, there's more people kind of agreeing on what the market price should be. The market gets bigger, the volatility goes down. And once that happens over time, then as volatility subsides, then people can start using it a little bit more comfortably as a medium of exchange, where right now it is a little too volatile to be used to kind of buy certain goods. I guess unless you're in a country like, I don't know, Nigeria or Venezuela, somewhere like that, where maybe this is a better alternative. In the United States, it's really not a good alternative right now for buying goods. But over time, like I said, it can then graduate from the store of value, become a medium of exchange. Then as more people are kind of buying goods and services with Bitcoin, then again, eventually those goods will start to be priced in Bitcoin. And then once that happens, it becomes a unit of account. It kind of graduates over time. Maybe that's 10 years, 15 years, 30 years. I don't know. But it can then graduate over time to be all three of those properties and truly be money.
So again, I'm gonna try to get through Alan, Jeremy, and Zach. I'm gonna try to get to your questions and meld them into the next one, which this was one of my favorite questions, Kent, even though I created it, which is, we hear about hackers locking down a technology system, a companies, and then doing ransom. And how do you pay the ransom? You pay it in Bitcoin. Mm-hmm. So now we got all of these crooks somewhere in wherever Eastern Europe collecting money in Bitcoin. How long do you think it's going to be before, like the countries or the regulatory agencies decide to root out what we in the business are trained daily about money laundering? So meanwhile, you got these crooks doing money laundering on a legitimate platform. Do you think that they're going to be able to regulate what is, I forget the term Bryan used, this is not a government base, this is use another term for it. Yeah, so is this going to be something that's going to be maybe eventually regulated to make it, less illegally used and more completely legitimate?
Yeah, that's such a fascinating question because as Bryan pointed out, some of the origin, the idea of Bitcoin was a distrust in authority. And it's a bit of and I'm going to exaggerate, a libertarian band of brothers and sisters that wanted to create a form of transacting that was not dependent upon the authorities that they believed not doing that great a job about things like fiscal debt management and money supply growth management and inflation and things like that. So it's interesting. The whole reason it exists is that it doesn't lend itself to close regulation. I know the U.S. authorities are trying to speed up, catch up, learn, and the level of regulation outside the U.S. is even far more immature than it is in the U.S. Some point to it, if fair or not, as your question pointed out, it does lend itself to some illicit activities. It was estimated that more than $1 billion in cryptocurrencies exchanged for illicit goods and services on the dark web each year. Recently, a Sydney resident was arrested for attempting to launder $4 million through cryptocurrency. But so I think that the effort, and maybe they need the technical expertise to be acquired, the efforts will be for higher regulation, especially if it asserts itself as a currency. There's a small group called the Federal Reserve that it takes managing our monetary system quite seriously and not quite ready to hand over the reins to a new form of exchange. But all those things I just said should also be offset by the fact that in the current administration, there have been some prominent appointees to very senior posts around things like the SEC and the Federal Reserve and the Treasury Department that have actually expressed some support and sort of open mind, forward-looking view toward cryptocurrencies. So I'm going to
let you go right into that with the next question.
All right.
Jeremy Pava says, at the end of the day, is an investment in Bitcoin really just diversifying again against the potential loss of purchasing power from inflation? I read a story that says if inflation kicks up, more people are going to want to use alternative currency, but it's going to make it, this goes back to what you were saying, but it's going to make it more difficult for governments to use monetary policy as they have been to get things under control. The article predicted that governments would move to take control by regulating Bitcoin, which would reduce its benefit. And then last week I read that India has now made buying cryptocurrency illegal in India. So is that the start of countries potentially shutting down cryptocurrency? So it's a two-part question. One, is it a hedge against inflation? Two, do you see more regulation in the future, which may take the shine off of the Bitcoin?
Great questions. And on the first one, I, for one, believe the inflation risks are very real and are very valid and have made the most fertile of possible ground for the concept of Bitcoin and cryptocurrencies in general to gain traction and attention and interest, because a legitimate case can be made that the quantity of money supply that's been created, perhaps for good reasons. I'm no Fed Reserve chairman, but I will observe that the quantity of debt we are incurring is now going to exceed World War II levels as a percentage of our GDP, meaning our total economic output. Right now, every day today, quantitative easing, meaning the Federal Reserve creating digital money, sound familiar? It goes into the financial markets and buys from, you name a big money center trading Wall Street firm. Believe it or not, if it's $120 billion a month, which is the current pace, which requires them to create digital money to make those purchases, that's about $630 million of purchases per hour if you go with 22 days of trading per month, an 8-hour day. So I don't stand here and say I know better, but I do believe that the quantity of money being created and the enormous stimulus, by the way, in 08, 09, we had stimulus, but that stimulus largely went to healing banks. It didn't really create circulating new units of money rapidly into the real economy. Today, individuals are getting checks. I have 3 young grown children in their 20s that have all received checks, and they don't necessarily need them, but they're sure happy to get them. And that money is circulating through the economy, and that's generally an inflationary thing. So I sympathize with the aspiration of people finding a way that if my X dollars of money is eroding in purchasing power because of inflation, I need to find an alternative store. But I just think of, when I personally think of that, I think of ultra defensive securities, maybe very, very short-term treasuries or short-term high-quality munis that have very de minimis returns, but at least yield something and have very strong credit characteristics. So for me, I would not dismiss Bitcoin, but I would view it as more of a speculative part of my portfolio.
So
and the other one,
are you guessing more regulation, no regulation? Again, I know it's a guess.
I would say more, and I would say any investor in this asset class, if it's an asset class, should assume that that's a strong possibility. Does that mean it's a bad outcome? Not necessarily. Maybe it gives it more credibility. But if I had to bet my chips, more or less regulation, I'd go all in on more.
Okay. I got a lot of questions from the Marcuses with regards to, digital wallets, Coinbase, Kraken platforms. What happens if you lose the password to your digital wallet? My question to you, Bryan, was, okay, I'm sold. How does somebody invest in Bitcoin? I've heard PayPal offers it. I think your firm does, but most conventional brokerage firms still do not. Explain where people have purchased Bitcoin in the past and the risk associated with those online versions. I've even heard stories of people going online thinking they were investing in Bitcoin and ending up just sending their money again to some hacker in some place we don't know. Yeah. So where does a person, if I decide tomorrow I want to invest $25,000 in Bitcoin, what does the average person do?
Yeah, sure. So really quick, as you mentioned, shameless plug, we do allow that. We have an asset management solution. We have an interest-bearing platform, trading, financing, all that. Let me know if you're interested after the call or whenever. So secondly, the one thing I would highlight, and also to Jay's point, in the past, there were ways where, again, there was less availability and kind of transparency in the space where people would go on a website thinking they were buying Bitcoin, and it turns out someone just kind of stealing their money. We've gotten to a point where we're kind of past that now, where it's really easy to avoid that kind of situation. But in the early days, that certainly was prevalent. Right now, I would also caution that the one place I would just say definitely don't buy Bitcoin is places like PayPal or Robinhood, where anywhere that you can't send the coins out to another wallet, such as those two, I would highly discourage doing so. Because again, you don't actually then own Bitcoin, you own some sort of loose passive exposure to it. And if you have to sell the funds and then send it elsewhere, then buy it again somewhere else in order to move it, then you probably don't really own Bitcoin. So in addition to BlockFi, there's a bunch of other really reputable exchanges now where you can do so. Coinbase is probably the most popular one. In the States, they're you probably seen the news, they're on the precipice of going public. There's a bunch of others. Kraken's a good one. Binance a good one. Obviously, I'm biased at BlockFi. You can buy it, and we also have a bunch of ways of kind of optimizing it.
And am I right, though, that if you work with Morgan Stanley, Merrill Lynch, JP Morgan, this is not something they're going to allow you to invest in to any great extent as of today?
So it's funny you mentioned that. Morgan Stanley, who you just mentioned, actually just announced that their entire wealth management platform will be not necessarily pushing people towards Bitcoin, but offering new solutions for their high net worth clients to get exposure to Bitcoin. So
for sophisticated, affluent people.
Yes.
Right. Yeah.
Is it true, though, there's stories about if you can't remember your login credentials, like there's this guy who had like 10 chances and he was on number 8. That's the old way of buying, right? And that's a true story because he was on the news. I imagine it's true. But that's not what happens when you work through a company like yours, right? I don't have to worry about losing
your keys.
Yeah.
Private keys, as they call them in the biz. But yes, so it's a little bit nuanced because I wouldn't say the old way is necessarily bad. So if you buy it through BlockFi or other firms, yes, we take care of managing your private keys for you. You don't have to worry about that. You have a login, you have a password. You don't have to worry about that at all. We take care of all that and custody it in a way. That being said, there are a lot of people in the Bitcoin space who look at that as a negative. And I'm kind of fall in the middle camp where I think it's good to use both, depending on what your goal is. So if you want to kind of monetize your Bitcoin and put it to work in different ways, then using a company like BlockFi or others is great. If you just want to kind of leave it idly, I think it's great to use some with exchanges. It allows you to more freely trade it, hold it, do different things with it. But there is, if you're comfortable with doing so, some security advantages to holding your own keys in cold storage. It creates, you don't have to trust any third party, which some people aren't always comfortable with. You don't have to worry about a Mt. Gox situation where, again, like we mentioned before, the security efforts have gone up dramatically where I don't see a Mt. Gox situation repeating itself. But for people who've been around the space who kind of were scarred from that, they don't have to trust anybody. They kind of be their own bank, as they say. And there are some trade-offs with either managing your own keys, but if you don't want to take on that responsibility, there are many options that you don't have to do so going forward.
I got a question about what is Chinese Bitcoin. So I don't want to pick on China, but a lot of times we get fraudulent, fake copies of things, a pocketbook or whatever it is. Is there going to be what is Chinese Bitcoin? Could I trust Chinese Bitcoin as much as I can trust, regular Bitcoin?
I have to be honest, I've never heard the phrase Chinese Bitcoin before. So I don't know entirely what this is referencing. And it's possible that maybe they're referencing the fact that a lot of the mining activity takes place in China. But, and apologies, I turned my video off. I had to plug my laptop in. But yes, so I don't really know what they mean by Chinese Bitcoin, but there is a large percentage of the mining that takes place in China. Doesn't necessarily mean that that's like occupied by the government or controlled by the government. You actually mentioned previously about, is this the beginning of governments banning Bitcoin? China's banned Bitcoin a handful of times at this point and have repealed that on numerous occasions because it wasn't particularly effective. And we've seen that in places like Nigeria in particular recently and China in the past, that when they have banned Bitcoin, it's actually just kind of increased the activity within those regions. So point being, a lot of Bitcoin is mined in China, but it's separate from the government and kind of more beholden to the individuals.
So we're close to wrapping up, but I want to, for anyone who is completely lost at this point, I want to make your night even more complicated because I'm going to ask you a question that this is the one that blew my head off. Okay, you ready? If I wasn't confused enough, I read that there are digital music coins, and that Mark Cuban was quoted as saying, if he were to start a business today, he would center the business around blockchain technology, smart contracts, and NFTs, non-fungible tokens. Okay, so which reminds him, he said this reminds him of the early days of the internet. So what the heck was he talking about?
Yes. So there's these things called NFTs, which are non-fungible tokens, where you're basically getting non-fungible, meaning you could kind of exchange something one for one. So like a Bitcoin for a Bitcoin or a dollar for a dollar. Non-fungible tokens means it's one of one. You can't exchange it for something alike to it. So this is being used for kind of creating like digital art, digital songs, where people kind of have the digital proof of ownership of certain assets. A lot of it, in my opinion.
Do you believe that people are going to have like digital baseball cards? Is this going to be the future? Like, how are we going to know if that, like, when I have my regular baseball card and it's mint condition and it's right in my hand, right? So then if somebody creates a digital version and they can make a digital fake, how are we going to know if that's like, so am I like going too far with this, or am I just not getting the concept?
It's a little bit nuanced, where again, I think a lot of this is kind of the flavor of the week in buzzwords and kind of isn't really in the same conversation as something like Bitcoin, where it's kind of like the hot new thing. And I don't really know how much legs it has to it. But the argument against what you said with proving that it's real would be the fact that there's a cryptographic signature that verifies that you have the real one, that other people, if they take a picture of it or something, won't be able to prove the same thing.
Okay.
But
I got one more question for Ken, and then I got a question for both of you, and we're still going to end at exactly 8:10. So, Kent, you talked about taxes. It's that time of year, and I just read that the IRS is adding a question to tax returns this year that asks if you have ever bought or sold digital currencies in the past. They are obviously phishing. The actual rule is, as you mentioned, under U.S. tax law, Bitcoin and other cryptocurrencies are classified as property and the subject to capital gains, but only when you realize those gains by selling. So if you bought cryptocurrency on an alternative internet-based platform, the same ones used by criminals, does the IRS actually know if you own it? I don't think they can. Or if you sold it. So do you think that eventually they're going to figure out, or is this going to be like, you know, bank accounts in the Bahamas where they're never going to have access to who invests there and what they're doing?
Yeah, and then I'll invite Bryan to chip in where my knowledge might be limited, but just briefly on the earlier China question, it may well be some of the literature you've observed pertains to the Chinese monetary authorities themselves experimenting with various digital versions of their own monetary supply. They'd rather sort of, and that, by the way, some skeptics argue that any government itself could go into the to the cryptocurrency business with greater heft and regulatory mettle and become a formidable competitor. But that's to be seen. So I think most crypto exchanges, at least in the US, are supposed to provide all information so you can report all relevant information on your taxes. But I certainly suspect you're right that beyond US jurisdiction, there are many that have crypto gains that are not identified. But that's probably true of many assets. It could be fine art, it could be precious coins that you hold in physical form that you realize a gain on, and the IRS happens to never find out. So I guess I don't necessarily view Bitcoin as the only way to cheat, but it does have some characteristics that are drawing the attention of regulators. So to circle back, I would suspect that the efforts of the tax authorities to be more effective at identifying and collecting are going to go nowhere but up from here.
All right, quick question for Bryan before I move on to the last question. This was one I was going to ask and forgot. I'm throwing it out to Ted Kaplan, who asks, I understand there are ETFs in the works. Bryan, you there? I want to know if there are Bitcoin ETFs in the works. Looks like we lost them. Kent?
Can you repeat the question? I was relying on Bryan.
Are there Bitcoin ETFs in the works?
Well, I think from what I understand, and by the way, my firm currently today I do not believe has any direct Bitcoin investment. So just to frame that, I do believe though that there are many opportunities and people are excited about. They used to call them the picks and the shovels. That, the mining analogy. So the facilitators, the infrastructure around cryptocurrency may, and I think is evolving toward an investable theme that ETFs are embracing. But I think I'll defer to Bryan further on that.
And then I'm going to go on to our last question. So here's a great one. Thank you, Simi, for sending this to me. An article that was today where Bank of America analyst Francisco Blanch was slammed Bitcoin as, and I quote, exceptionally volatile, impractical, and environmentally disastrous, which goes along with Neil Cochin's question that he asked before about this being an environmentally disastrous asset that's useless as a store of value or an inflation hedge. He goes on to say that Bitcoin is an impractical method of payment because it can only handle 1,400 transactions per hour, while Visa does 236 million. This is a stark contrast to comments from Goldman Sachs, JP Morgan, who have embraced Bitcoin, as Kent talked about before. Again, who do we believe? Bryan, I'm going to toss that one out to you.
Yeah, sure. So Bank of America obviously came in the report. It is, like you said, in stark contrast to pretty much all of their peers who have kind of released reports recently to the contrary of Bank of America's point. On the inflation hedge part, I would again refute that because it is the only verifiably scarce asset in the world. It is at this point more scarce than gold, which was previously kind of became what it is because of that. And over time, again, most monies have ceased to exist because of the ease of production, which gold has solved for, and then Bitcoin has solved for even further. On the environmental part, again, I would refute that, going back to what I mentioned earlier, where the majority of Bitcoin is mined using renewable energy. And miners are incentivized to use the cheapest energy, which most often, not always, but most often tends to be renewable. And again, people will kind of make these reports over, well, Bitcoin does X amount of transactions now. If they did all the transactions in the world, then that would consume 1 billion times more energy than there is in the world to begin with, which is completely detached from reality because the amount of transactions that take place in the network have nothing to do with how much energy is used in the network. So the third thing was related to, what was the last part of that?
Environmentally disastrous, being a use of transactions, 1,400 per hour.
Oh, yes. So the transactions part. So yes, so Bitcoin is a settlement layer of the network, and there are things called layer 2 networks that are being built on. The most popular one being the Lightning Network, which Jack Dorsey's company, Square, is doing a lot to build on. You might have heard of Zap, which is a company in the space where, if any of you are football fans, Russell Okung partnered with Zap, where he's taking half of his contract now in Bitcoin. Saquon Barkley is about to announce he's doing a similar thing. He's kind of hinting at it. And yeah, so there's the layer 2 things that will allow for the scalability of Bitcoin, whereas the current status of the Bitcoin network is just the settlement layer.
So I got one last question. We're right at 8:11. If one of our watchers or listeners want to learn more about cryptocurrency, can you give me a few suggestions on where they can learn more? Is there a book called Crypto for Dummies? Is there one out yet?
I would say the number one book I always recommend is called The Bitcoin Standard by Safedine Amos. I can write it in the chat if it's helpful, but I don't know if I have that functionality, but it's called The Bitcoin Standard. If you look it up, you can find it. He's a former Columbia economics professor, the author, and he kind of goes into the history of money and some of the inefficiencies of the current system and how Bitcoin can solve for it. So I think that not only does it paint a picture of Bitcoin and learning a bit about how it functions, but I also think it does a great kind of historical reference point for why it even exists in the first place. If for those who are interested in podcasts, I think that my two favorites are the Pomp Podcast and On the Brink.
Say that. Wait. Say it again.
The Pomp Podcast. So POMP. His name is Anthony Pompliano. And then the second one being On the Brink, which is done by another investor in the space named Nick Carter, who was originally at Fidelity before now doing his own thing.
So, and then I promise this is the very last question. I find that in life, most people don't invest in things that they don't understand. Is it possible for the average person who doesn't have a math background, doesn't have a finance background, to learn enough about Bitcoin to trust what they've learned to invest? Or is it just going to be basically sort of a blind trust? I'm just going to wing it with what a lot of people say, well, just put 1% of your investable net worth in and you know, go with it. Which one do you is it possible to I know you understand it, but you're like half my age. I mean, assuming you're 60, right? Your brain's sort of filled up, okay? Is it possible to really learn enough about this to trust it enough to say, okay, I understand that I'm going to put 25 or 50,000 in?
Yes, I do think so. I think anybody can learn it. And I think that being said, it takes into a lot of factors in not just kind of computer science and math and economics, and also kind of game theory and psychology. So it does take into a lot of different factors, but I think anybody who wants to learn it, there's certainly a wealth of information out there to do so. And I think that an interesting thing to note though, is that for people like yourself who are kind of established people, very kind of have done a certain amount in life, the United States is a pretty fortunate place to be, Connecticut nonetheless, you haven't really had to learn about it. I think that what's interesting is that people with kind of less education in regions like Nigeria and Venezuela, like I alluded to earlier, and China and some others where they've kind of been forced onto this and had to learn it, have learned it much quicker. And because they see some of these hyperinflationary risks, some of these risks for their government and kind of over censorship, and some things that kind of happen in their real life. And they see that there's this new kind of removed from the system alternative that kind of pushed them into having to learn it. And these people, you're seeing that the proportion of activity in those regions is astronomically higher than it is. There's more people overall and kind of more probably in institutional involvement in the States, but on like a daily average person usage, the proportionate usage in those regions is much higher for those reasons. So I think it's kind of, if you want to, you can. You just kind of need to want to do it or need to do it, depending on your situation.
So we're going to wrap up. Again, Kent, Shepard, Franklin, Templeton, I want to thank you so much. Obviously, I've known your firm since I started 30 years ago. Bryan, I just met you a couple months ago, but you were fascinating tonight. And, you know, I do want to tell you just a quick funny story. When I first went to look for somebody to speak, I can't believe the names of the people who are experts in the Bitcoin field. The fact that you are wearing a white shirt and you nicely groomed. I'll tell you, if you guys want to Google experts in the Bitcoin field, you'll know exactly what I'm talking about. So, thank you for being one of us.
Absolutely.
And with that, I'm going to turn it over to Coleman Levy to wrap us up. Thank you so much.
Thank you.
I must say, fascinating, controversial, and I want to thank Bryan and Kent and Jay for moderating a great, informative, educational discussion. And I want to have a big thanks to everyone for joining us tonight. And we are especially grateful to our Federation business partners. And if you know any of them or you come across them, don't hesitate to say thank you to them because we're very grateful, because they help offset the cost of much of our program so that the donor dollars that we raise are able to meet Federation's objectives. I just want to let you know that we have 2 more men's philanthropic programs coming up this spring, and spring is next week. So on the 29th, the Solomon Society is holding a program with U.S. Congressman Ted Deutsch of Florida. He's chair of the Ethics Committee. He chairs the Middle East, North Africa, and Global Counterterrorism Subcommittee. And he'll discuss the Biden administration of what is likely to mean for this is going to mean for the Middle East. He'll also talk about gun laws, since he is the chief whip of the Gun Violence Prevention Task Force and represents the district where the Parkland School shooting took place in Florida. And we are honored to have Dennis House to be the moderator for that evening. He's the political analyst for Channel 8, and most of you know him for his many years at Channel 3. And I want you to save the date for May 10th, when we are holding a socially distanced Dignity Grows packing party. And you'll recall I mentioned at our last get-together about Dignity Grows. It's now become a national program that was started right here at our federation by Jessica Zaks, who is married to Eric. This program provides the hygiene supplies for primarily it started for women. And now with regard to our involvement, we want to expand that for men. And I've become involved with that through my wife, my daughters-in-law, and my grandchildren. It's very meaningful. It is really something that people really need, and you don't think about it. So I hope you'll join us, and invitations will be coming out shortly, and I look forward to all us getting together. And if you're so inclined, each package costs about $10. And if you are that inclined and you want to make a small donation, it's greatly appreciated and it will be very helpful. And now I'm going to turn it over to Jessica's husband, Eric, to close out the program.
Well,
Eric?
Coleman, that was, I'm going to tell Jessica you said that later, and I'm very honored to be her husband for 36 years almost, and so that's great. It's also great to see everyone here. You know, half the time I didn't know what the hell they were talking about, like folks, and then the other time I was like overwhelmed that I knew. I wasn't sure if it was good or bad that we didn't do this program in August when Bitcoin was 9,000. You know, who knows? It's 57,000 today. Tomorrow, I don't know. It might be back to 9,000. So it's always dangerous. But I was just reflecting on this program and everyone who's participated. So we're so grateful for everyone's participation, these 5 sessions, and to everyone who's participated. And I think Federation is kind of the anti-Bitcoin, as I was thinking about it. They're decentralized. No one knows anybody. It's uncontrolled. There's what's the accountability? Who knows? There's so many great things about it. But we are actually an amazing community here. We know each other. We're trying to expand to people who we do know, others that we don't know. We're about tangible relationships. And as I look at the people's faces, that's what we're all about. And we're about that. And frankly, we've been about that. I don't know if Bitcoin's going to be here 100 years from now or 200 years ago, but I know we've been around in one form or another, recreating ourselves for 100 years. And God willing, the older folks, the middle-aged folks, and the younger folks on this will be about us recreating ourselves in tangible, real ways as human beings who believe and are about building a stronger Jewish community here, taking care of people around the world as our connection as Jews. And so, and reaching out to other communities, and Dignity Grows is all about that, And so we're so grateful for everyone's participation, you know, their time, their effort. If you have ideas for us, other programs you want to see, let us know. You want to join us on the committee. We are decentralized in that respect. So we're like Bitcoin. We're totally decentralized. Make whatever comment you want. We welcome it. And we appreciate your time. If you've made a contribution this year, we're so grateful for that. And if you haven't, we hope you'll do that too. because all these good works that David mentioned before, helping community, helping our institutions, security, all these things, they do take some money. And so if you're so inclined, we appreciate that. And so a final thanks really to the staff. None of this happens without incredible staff at Federation. The entire team. I'm not going to go through it because every time I say the names, I miss like half the people. But you can see a lot of people. And so we are the men's engagement. We're a band of brothers, but we're also a band of brothers and sisters. Women are welcome. And so everyone is welcome to join us. And we really just appreciate everyone's time. Thank you for being here. Thank you for being part of our federation yesterday, today, and tomorrow. Have a safe evening. Stay safe. Be healthy. And we're about relationships. You can't hug your Bitcoin, but you can hug your kid. You can hug your wife. You can hug your husband. You can hug your parents. You can tell someone you love them. And guess what? At the end of the day, you know what? That's what gives meaning to life. And we really just appreciate.
Let me close it out by saying I love you, Eric. You're the best to work with.
Thanks, Jay.
And thank all of you, every single one of the 104 of you who joined us tonight and are making this men's engagement better and better every single time. Thank you very much and good night.
Thank you.